Alrighty guys, what is going up? Welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about the absolute best 3 growth stocks to buy and virtually never sell for the rest of your life. Now, a lot of these are going to be growth ETFs, though they're going to be a little more volatile like compared to like the S&P 500 or a lot of value stocks. These growth stocks and these growth ETFs are going to be ones that swing, but definitely have been killing it in the past year. And I personally think the overall trend for this is going to get stronger and stronger and stronger. But by far the absolute best growth ETF is GUV. This is Vanguard's growth ETF. Now, the main reason why I love this one is because look at these holdings in here. The top 3 holdings are pretty much the top 10 companies that I already own in my investment portfolio. So the very first one is Apple. We got Microsoft coming in at number 2. 3, we got Alphabet or Google. 4, we got Amazon, Facebook, Tesla, Nvidia, Visa, Home Depot, and MasterCard. So the beauty of this one is you get an overall beautiful growth. The year-to-date growth is over 42% and growing, and I think the overall trend is going to continue. Now, if we actually go ahead and we go to the 3-year chart, you guys can see that we did have this March crash. It hit that 200 moving average line and just exploded up. Now, from those lows, this thing is up about 118%, which is that's fantastic. So you always got to understand that this is going to be one that is going to be more of a long-term ETF that carries a ton of risk and a ton of not a ton of risk, but a ton of long-term potential with very, very little risk, just because a lot of these holdings are blue chip companies that aren't going anywhere anytime soon. So this is my number 1 pick by far. Every investor should have this. But ETF number 2 is a very, very popular one. It's ticker symbol PRNT, kind of like print. Now, this is ARC ETF. It's a 3D printing ETF. So this company or this ETF actually has a variety of awesome holdings in it. We can actually look at it. And all these companies in here are 3D printing companies. Now, you might be saying, well, Carter, the overall growth for 3D printing isn't very good. And I would rather buy a different company. But here's the thing. Now, 3D printing over the past year has been growing at a astonishing rate. A lot of these companies are making actual like medicine from these 3D printers, like artificial livers and kidneys, and the growth is crazy because they can make them. You don't have to worry about a transplant when you can actually just print them. So this one is going to be more volatile, more risky, but overall, in my opinion, is definitely worth just taking a little bit of a stab at. Over the past couple of months, we've gotten a little bit of sell-off of about 22%. Which brings a ton of opportunity for this one. But this one is going to be more of the volatile one and the riskiest one that we talk about today. But still worth checking out for sure. ETF number 3 is QQQ. This is probably the most popular one that we've seen. The reason why is you guys know QQQ. This is a tech-heavy ETF. So the top holdings is Apple, Microsoft, Amazon, Google, Nvidia, companies like that. Those are really the top 5. Very similar to VUG, but this one is more tech-sided. When VUG has companies like Home Depot in it and companies like that have a lot of growth but aren't really tech focused. This one is going to be more of the tech companies, like Facebook's in there too. You guys can see it hit that 200 moving average line, had a ton of buying pressure, really had some resistance here at around 338, sold off, broke out of resistance, and has been climbing up ever since. Right now it's a little overvalued, so we'll probably get a little bit of sell-off back down to about 360 or so. But guys, this is definitely worth taking a stab at. You guys can see the absolute powerhouse that this ETF has gone up. But by far the best investment strategy behind all of these is going to be dollar cost averaging. So what it is you guys pretty much figure out however much you want to invest, whether it's $10, $100, some of you will even invest $1,000 per week. So what you do is you get a good average time period, a good average price for that time period. So if that's, say you're nervous about this stock or ETF being overvalued, but you still want to hop in. So you pretty much invest $100 a week over the next 10 weeks. So you invest the total amount of $1,000, but you get a good average price for that 10-week span. So if this ETF sells off, you just average down in your shares, and then once it recovers, you make a ton of money. So guys, these are the top 3 ETFs that I would never sell. And if you don't have them, buy them. So that is it. I hope you guys enjoyed it. Remember to stay happy, stay positive, and stay safe out there. Take care.